Hello everyone, I'm Luby, and today I'm going to present you guys around the topic of mortgage, specifically around the impact of high prices and mortgage rates on homeowners. So the whole discussion of today is based on a recent article named, as you can see right here, with high prices and mortgage rates, aspiring and current homeowners feel stuck by Alex Haring, published by CNBC on July 13th, 2024. So without further ado, let's dive in. The current housing market is characterized by high home price and elevated mortgage rate. These conditions are affecting millions of homeowners and have created even more barriers for aspiring homeowners. I'll first explore what have been mentioned in this article by these 4 bullet points. It starts by addressing the core issue, the double whammy rise in both home price and mortgage rates. As for now, the average mortgage rate is around 6.77%, which is considerably higher than the rates have been seen in recent years. For example, at right here, as you can see, in 2021, January, the rate is only 2.65%, which is almost three times down of the current mortgage rate. Another major theme that this article have mentioned is many homeowners feel stuck in their existing homes because simply selling and buying a new property at this time, it just seems merely impossible. It would mean that taking out a new mortgage at a much higher rate, and this phenomenon often referred to as mortgage lock-in. It often occurs when homeowners with lower interest rates on their existing mortgage are reluctant to sell or face another higher rate on their new loan. The challenges are even more pronounced for those first-time homebuyers. The high borrowing costs combined with elevated home price create huge barriers to entry the buying market. Within the article, it also mentioned that many first-time buyers found it's really hard to balancing already very expensive living cost while saving up for their down payments under this current economic conditions. And for many, the dream of having their own house is even becoming elusive. The article also discussed the broader economic and social effects of mortgage rates. When homeowners are unwillingly or unable to move, it would cause a ripple effect in the labor market, with no doubt. It limits the labor mobility, which can lead to inefficiency in the job market, and the already really sluggish housing market would lead to a longer term economic stagnation, and it'll finally all come to affecting construction industry, real estate industry, all those many industry related to housing market. So after having a real quick recap of what happened in this article, in order to understand why this phenomenon is happening, we need to understand a more simple concept. We need to rewind to lecture 2. What is mortgage? So based on our lecture, mortgages are secured loans that banks lend to home buyers. The property serve as a collateral for the loans. There are 3 essential components within mortgage. The first one is purchase price. Second one is maturity time span. And the third one is the cash flows of the payment, usually monthly payments. As you can see right here, this is a formal formula of the mortgage. And these are the formulas provided to calculate cash flow of mortgage, which is monthly payments. So why are these mortgage rates kept insanely goes up? It never stops. What caused it? There are several reasons already mentioned in this article. Economic factors is definitely the first one, as inflation. So as inflation keeps going up, interest rate keeps going up, and consumer has to pay more. As mentioned in the article, there's one quote saying the negative effect of high rates and prices more than outweigh the benefits from growing income for a typical American. The high demand and limited supply also drive up prices as well, reflected in the higher borrowing costs. So in order to combine concepts with things have been mentioned, the true scenarios in the article, I came up with a hypothetical scenario. So how to calculate mortgage? Suppose my friend Raven wants to buy a house in Santa Monica, California for $5 million and takes a 30-year mortgage from the bank at a fixed annual rate of 9%. However, she's currently paying $25,000 per month at a 4.5% mortgage rate for the house she's currently living in, which is also around $5 million. What would be the new house monthly payment, and would she be willing to move out? In order to solve the monthly payments, we need to rewind back to the last slide, and we need to gather all the info, all the numbers within the questions, and substitute it back to the formula. As you can see right here, the $5 million as for the house current market price is on the left side of the equation. And these are this is the monthly interest rate, which is effective interest rate calculated by 9% over 12 months. And the 360 is the total payments have to be made in order to pay back to the bank. After all those big chunk of calculation calculated not by me, by the financial calculator, the monthly payment in order to afford this house, Raven has to pay $757 monthly in order to afford that 5 million house. So apparently she's doing 25,000 monthly payments right now, as you can see right here, and she's paying 4.5 mortgage rates. There is no point for her to double the mortgage rate and pay even 2,000 20,000 monthly payments to just to afford this mortgage rate and this insanely high home price. So as for Raven, Raven would be one of those who mentioned in the article. As a homeowner, she would feel trapped, and since the home price and the interest rate is just simply too high for her to switch a house with a view that she wanted, with a Santa Monica Beach view, so she would not switch the house right now. So in conclusion, the combination of high home price and mortgage rates are significant economic and social implications. And the fact we just talked about, the hypothetical scenario, also proven that true. To look ahead, the dynamic between economic conditions, mortgage rates, interest rate, and even Federal Reserve policies are all the factors that any house market investor or any home buyers need to consider before they making the purchasing decision, which for many probably the most important purchase during their lifetime. That's all for my presentation today. Thank you.